Why did CIIG Merger Corp. (CIIC) stock rally over 30% on Friday? CIIG Merger Corp. (NASDAQ) CIIC is a special purpose acquisition company (SPAC), which is a firm with no commercial operations and no assets. SPAC is usually formed to raise capital through a public listing. Its main purpose is to acquire an existing company, which is why SPACs are also called blank check companies. A SPAC is usually established by a group of investors with a strong background in a specific industry. They raise money by adding other investors and then use those funds to buy another privately held company. The investors behind a SPAC usually don't have a specific goal in mind. Even if they have a target, they usually avoid revealing it to prevent the disclosures and lengthy paperwork demanded by the Securities and Exchange Commission (SEC). Some of the most famous public listings over the last year were made possible through SPACs such as electric vehicle startup Nikola Corp. (NKLA) and electric automaker Fisker Incorporated (FSKR). Coming back to CIIG merger, which once again came under the limelight on Friday morning after its share price skyrocketed more than 30%. The apparent reason behind the surge seems to be a recently released interview of Arrival's president. For those who don't know, Arrival is a U.K.-based electric van startup that decided to merge with CIIG last month in a transaction valued at $5.4 billion. CIIG Arrival merger. CIIG and Arrival announced a definitive deal for a business merger in November. According to the terms of the agreement, Arrival would receive nearly $600 million from the deal, which is expected to be finalized during the first quarter of the next year. CIIG will use $260 million it generated from its public listing and $400 million from institutional investors to fund the transaction. The biggest shareholder of CIIG is BlackRock with a stake of 7.5%. The combined company will trade on NASDAQ under the new ticker symbol ARVL after the successful closure of the deal. Arrival has already received approval for the merger from its existing stakeholders including United Parcel Service, UPS, Hyundai Motor Co., and Kia Motors. Moreover, CIIG will hold about 12% of the combined company, while the rest of the shares, around 88%, will be owned by the existing shareholders of Arrival. The present CEO of CIIG will join the board of directors of the new company, which will have around 606 million outstanding shares. Growth prospects. Arrival growth prospects seem bright considering the pre-orders it has received so far from different customers. For instance, it has received an order to manufacture 10,000 electric delivery vans for UPS. The U.K.-based maker of electric vans and buses is not making any significant money as of now. However, it expects to generate revenue of around $1 billion by 2024. But we must wait and see if the company would be able to achieve that landmark. On the bright side, the electric vehicle (EV) market is expected to grow at a tremendous rate in the coming years. Governments around the world are urging automakers to switch to clean energy sources. China, Europe, and the US have been introducing stricter emissions regulations that will certainly boost the demand for EVs in the future. Moreover, research firm IDTechX projects the global commercial EV sales to reach approximate 2 million units on annual basis by 2030. The same firm forecasted sales of around 7.3 million units per annum by 2041. Arrival is also expected to capitalize on the rapidly growing EV market. The reason behind CIIG stock rally. CIIG shares rose more than 30% in the midday trading Friday, following positive comments from Arrival's president CSO Avinash Rugober. Speaking in an interview with Bloomberg News, Rugober said his company plans to start manufacturing its buses by the end of 2021, followed by 2 models of commercial vans slated for the second half of 2022. He added that Arrival will produce electric vehicles for a comparable cost to diesel vehicles. The company will be able to reduce production costs by decentralizing the manufacturing process with microfactories, which can be established anywhere, he said. Rugober also said that bus and van owners will more quickly switch to Arrival's EVs due to their affordable prices. Separately, host of Mad Money on CNBC, Jim Cramer also backed CIIG on Thursday, saying CIIG has the best claim to be the son of Tesla. Tags: CIIG Merger Corp, NASDAQ, CIIC, SPAC, Arrival, ARVL, UPS, Avinash Rugober, Jim Cramer.